Welcome back to Golden Rule Radio, your weekly recap of the metals markets. Today is Wednesday, June 20th. And without further ado, we're going to jump right into your master analyst here. Miles, why don't you fire away with just gold?
Tori, I know everybody wants to probably start with gold because that's certainly the question we've been getting all week. Why in the world did gold come down $20?
Yeah, I'm throwing you under the bus right now. That's what I'm doing.
Yeah, which is funny. If you want to tell the story right, you got to look at the dollar, you got to look at some other commodities, but we can definitely start with gold just so you kind of know where our projections are going to be over the next couple weeks. Our big argument was if we double tap against 1285 and start pushing back up, that's certainly going to go ahead and look like gold's climbing for the near term. Our other argument a few weeks ago was if we push below 1285, and Robert, I believe, brought this up, we certainly could see gold down in the 1250s, 1225, maybe as far out as the long-term 618 fib at 1212. So there's certainly some lower numbers we could see here. We look for those stair-step moves, and the way this is stepping down, I think we're going to see at least one or two of them. So I definitely hang on over the next couple weeks. We figured we'd put our annual low in June. June's not over yet. I think we might have another $20 to go down on gold before we find bottom.
I totally concur, and it doesn't upset me in the slightest. Look at these again as entry points in the big picture. And just because July 1 rolls around doesn't mean we immediately start rallying either. Summer tends to take a little bit to get some steam rolling, and then we end up seeing in August that the markets begin to climb back up.
And all of this does revolve around what the dollar's doing. We can talk about gold or the Dow
Absolutely.
Or anything else all we want to, but the reality is as goes the dollar, so goes everything else. So we saw the dollar come into the top of that previous head and shoulders pattern. Again, that could have been a top. The dollar could have turned down. It bounced off of that, but obviously has popped right back up. Interest rate discussions, tariff discussions, a number of things have obviously aided in the strengthening of the dollar. Now, from a technical standpoint, we will see the dollar run out of gas here probably in the next couple weeks or months or so, just like we're starting to see gold find bottom and some of the other commodities. So you can see on the charts, we appear to be stair-stepping up or starting to stair-step up in the dollar chart with some divergence against a relative strength index. So we could see a good old-fashioned Elliott wave 3 drives pattern up to, maybe around 96 or possibly as high as the 618 there at 97 and change, 97.85. So we could see the dollar continue to rise for a couple weeks here. That's going to coincide with that push down in gold and some other commodities, and the Dow should continue to fall here. And then everything as we move into fall is going to flip-flop.
Yeah, I want to see what happens with the dollar because this is a good indication of what the markets do immediately when there's uncertainty in the markets, right? So the whole world flies into the U.S. dollar. You've got Europe talking about reinitiating its bond buying program. You've got Russia dumping treasuries. China's not happy with this, and that they're not buying any treasuries.
Well, and that their market isn't happy with this right now either.
No.
Down 10% in a single day?
In a single day. So, you can say, the tariff wars are going to hit home on our own economy. And possibly, certainly in individual market sectors, absolutely. From a macro standpoint, China clearly is going to be the one that's under severe pressure, far more than our own markets are. But getting back to that dollar, when the reality starts to set in and you do see things like the treasury dumping and what have you, then obviously you're going to see some weakness in the dollar. And I'm not buying it that this is some long-term, I'm looking more at that 96 level for a ceiling than I am the 97.
Yeah, Tori, and it's not just gold, as you alluded to. Gold down 7%, I believe, from those June highs. But let's take a look at some others. Copper, 8.5%. Oil's down 10.8%. Corn, 14%. So all of our commodities are pushing down. Gold is the one that seems to be doing the least bad. Can you say that? Yeah. But most of your commodity pricing, futures market pricing, is coming down pretty hard with the dollar. So like I said earlier, everything revolves around what the U.S. currency does. It doesn't matter if you live in Bangkok or Oklahoma. It doesn't matter if you're trading corn or
Soybeans, which were down 2% yesterday
down
alone.
2%
There
yesterday.
is a victim of the tariffs right there. So, yeah.
So we're seeing these movements across the board. And after, a year and a half of dollar movement down, it's not unreasonable to see a few months here where it pushes back up. And through the summer months is always the time for it to happen. So I guess what we're getting at is if you're nervous about the market moving, whether you're sitting in an equities position right now, you're sitting in a metals position, you're sitting in some futures contracts or looking at diving into the market, there's a reason people say sell in May and go away. It's what the market does. So you do have to be a little bit more dynamic during this time and expect things to move possibly against you for a period.
It's also why we recommend a diversified approach in your portfolio into tangible commodities, right? It doesn't have to be gold and silver, but look at what the commodities are doing counter to the US dollar. Commodities naturally adjust to the varied value of that currency against which it's being measured. And so the commodities make a great hedge. That is what a hedge does.
Well, and look at what the physical metals are doing compared to the mining companies right now.
Oh, man, the mining companies are getting hit hard. I mean, the mining stocks are their lowest point in 18 months right now, which is another indicator of why you diversify into tangible. Okay, it's not your mining shares are not your gold position and vice versa. This is not something that you look upon as a speculative investment. Physical metals are your, just like what we're seeing in the industrial metals, it's your hedge against the currency weakness.
Right, and your physical gold over the last 18 months is still up $150. So I think the last point on metals we should look at is the silver market, because from my perspective, silver is, regardless of the world around it, doing exactly what it should be doing right now. We came into that top trend line again. We corrected hard off of it at the same time. I've had a couple people sitting with cash on the sidelines waiting for 16 or sub 16 silver. I think we're going to get there. So if you've been sitting looking for a metals opportunity coming up over the next week or so, I think the move is going to be into silver. So we'll throw a silver chart up here, and you can see how it's been in that compressing trend line for a very long time now. Those points are going to come together here. The silver price is going to have its breakout, and that's probably also going to coincide here in the next month or so when everything else turns. So we get into August, September, October, and we're going to start seeing a vastly different market, just like we did last year, just like we did the year before.
People get frustrated with the fact that silver seems to not be doing a whole lot. We did get a lot of volatility here in the last few weeks, but if you go back, you'll see that silver actually is holding very strongly. Silver has narrowed that ratio in the gold-silver ratio by 5 points. And so even though we're sitting at around 1635, the good news is that's where we were a month ago, 2 months ago. And yet gold has come down substantially, as you mentioned, the 7%. That's what tightens that ratio, and that's why we have a heavy silver position. So a couple things to keep your eye on here coming up in the next week. Obviously, the tariff issue, there's going to be much politicized debate going back and forth, a lot of finger pointing, a lot of blaming. And again, like we started the show, China really stands to lose far more than we do. We've long expected there to be a inflationary hit to Main Street here in the United States. Could this be the start? Yes, absolutely. The reality is our prices have been artificially suppressed because of the amount of importing that we've done through China. And if that decreases and you really start utilizing more American-made goods, get ready, Americans, for your prices to be significantly higher. The other issue I wanted to point out, bank stress tests. So the Federal Reserve is going to release those results of those stress tests tomorrow, the day that this airs, Thursday the 21st. So I'm actually anxious to see what it shows, and I would encourage you to call us for a bank rating. If you're concerned about your bank and something pops up through this stress test, give us a shout, and we're happy to walk you through a bank stability rating.
And Tori, before we close out today's show, I think we all need to bid a fair adieu to General Electric.
Oh, it actually breaks my heart. That's like the last stalwart. I'm so glad you brought it up. I would have totally forgotten. I mean, here's GE. It's going bye-bye.
For those of you that may not know, I believe next week, General Electric, the last bastion holdout of the original Dow 12, will be removed from the Dow Jones Industrial Average.
Only to be replaced by Walgreens, which is service industry, mostly pharmaceuticals. I don't see how it's quite as industrial as General Electric, and General Electric's still twice the size of Walgreens, but this goes down to manipulation. It's getting rid of that which appears to be weakening, bring in that which is strengthening, and the old DJIA figures can fool the populace once again as it gets stronger.
So that's going to about do it for us and General Electric this week on Golden Rule Radio. Thank you all for listening. As usual, if you liked what you heard, hit the subscribe button, ring the bell, head on over to Twitter at ICA Gold. Stop by our website, McAlvany.ica.com, or give us a call anytime, 1-800-525-9556.
Thank you so much and have a great week.